DG IDSA. Ladies and gentlemen, thank you very much for having me. It's a great honor to be presenting in IDSA. The title of my paper is India's Role in the International Oil Market. In the paper, I assess India's current oil demand profile and place it in the context of the global oil market. I argue that in order for India to actually improve its energy security, we need to urgently look inward. Some of the first steps that we can take to address our energy needs are changes that we can work towards domestically. Specifically, we need to reform our domestic fuel pricing structure, encourage investment in the oil sector, promote alternatives, and lastly, work towards deepening our ties with resource holders. That's something Samir highlighted, and I appreciate that. In contrast to some of the other views of energy security that we've got, my version of energy security is fairly straightforward. Energy security, put simply, is just this: a nation's access to reliable energy supply. In the context of the oil sector, it means that you need to protect your economy from high oil prices. So the more you conflate energy security with other issues, I think you're getting off the point. A typical energy security strategy depends on 5 pieces as highlighted on this slide. On the demand management side, it means conservation or efficient consumption. It can include a diversification of the energy mix or of oil supplies. From a strategic standpoint, it can include government stock building. It could be crude product stocks. And then on the military aspect, you can have the naval strategy where you ensure the free flow of oil. But what should our energy strategy be? What is in India's national interest? Now that arguably stems from identifying our objectives and capabilities. From a pure objectives versus resource capabilities analysis, I would argue that our national interest is best served from demand conservation, intensified efforts at promoting alternatives, and finally how we partner with global resource holders. Today, global oil prices are driven not just by supply-demand fundamentals. They are also driven by geopolitics, particularly when the market builds up expectations of supply disruptions. We are seeing this right now in the case of Iran. It's Dubai was $115 per barrel in the morning. Paper markets are increasingly important as the popularity of oil grows as a hedge against inflation. Finally, refining investment and demand across the world supports prices as well. On the demand side, we are seeing 2 important trends. First, the magnitude of Asian demand is growing. Second, as we look out to the future, most of Asia's supplies are also likely to be met from the Middle East and Africa. And we calculated that between 2010 and 2020, Asian crude will rise by approximately 4 million barrels per day, and half of that will come from the Middle East and Africa across the Indian Ocean. That was the global context. What about India? We are highly dependent on fossil energies. And about 93% of our domestic fuel consumption is fossil energy based. So that was 525 million tons of oil equivalent in 2010. Now demand for this fossil energies is increasing very rapidly. In 2010 alone, India's primary energy consumption grew by 9.2%. This was slower than China's 11% growth, but still higher than Asia's, on average, 8.5%. Note that this excludes biomass, so if we don't have combustible renewables in this, that could be a higher consumption figure. Meanwhile, imports now meet 80% of India's oil demand. On the supply side, now that's the red line on the bottom, we do have some incremental growth in output in recent years, and that's driven by higher output in Rajasthan and East India. But for the most part, our crude oil fields are mostly mature and they are declining. Their production is declining. it means that output growth kind of stays at about 850, peaking at about 900,000 barrels per day through the end of this forecast period. So growing domestic product demand and the addition of refining capacity has meant that demand for feedstock crude continues to increase, and that's the blue bars on this chart. In the last 10 years, that has increased very rapidly. Refinery demand for crude has grown by almost 9%. That being said, India is not alone in seeking increasing volumes of energy imports. Given that a large share of world economic growth is forecast to come from Asian economies, a significant portion of the increase in world energy demand is expected to rise in this region. In particular, the two largest economies, China and India, are forecast to go for a significant growth in energy imports, particularly those of oil. Looking specifically at oil resources, India's oil imports are forecast to grow to just under 4 million barrels per day by 2020. At the same time, China's oil imports are expected to balloon, explode even, from about 4 million barrels per day now to over 8.5 million barrels per day by 2020. Now, when we take a look at petroleum product demand in India, as you can see, middle distillates like gas oil, which is diesel, really constitutes the lion's share of our demand. This is followed by liquefied petroleum gas, which is LPG, that's cooking gas, and then gasoline. Demand for industrial fuels like fuel oil or furnace oil, and naphtha, a petrochemical feedstock, is relatively minor. Jet fuel demand is growing, but that's still from a very small base. At the same time, India's oil picture is not really that straightforward. With the growth of India's refining industry, since around 2001, India has actually been a net refined products exporter. On observing this, one might be led to believe that India is self-sufficient in oil-based energy resources. However, that's not the case. Refining investment success, particularly the startup of export-oriented refineries that have little incentive to sell within the domestic market, has meant that we are actually net exporters of diesel, gasoline, jet, but we still import some kerosene and LPG. So when you look at that exports is actually not a total exports number, that's the exportable surplus. So basically it just means your supply less demand. So that's your exportable surplus, and if you go look at the lower half of the charts, that's imports, how much of a shortfall there is, and you can see that the shortfall is in LPG, and going forward we'll actually be short of diesel too, because it's because of the high rates of growth in diesel demand in India. One of the reasons product demand is growing so rapidly is because domestic retail prices of diesel and LPG don't really reflect the change in international oil prices. Now this slide is very busy, and I apologize for that. But I'd like you to focus on the table above the chart for now. That table shows international and domestic fuel prices from about the end of 2003 to about mid-2008. This was a time when crude oil prices almost quadrupled. But only about 2/3 of the increases in world oil prices passed into India's domestic retail prices of gasoline and diesel, and kerosene prices didn't actually increase. So by insulating India's consumers from this price pass-through, our energy subsidies really blunt the consumption, the incentive to economize our consumption. While there has been progress on this front, we need to take the next steps. Diesel, which accounts for 40% of India's oil demand, as you saw in the pie chart earlier, those prices are more or less capped still. Now in 2010, the Indian government freed gasoline prices, but not diesel. What that did was that it widened the inter-fuel price differential between diesel and gasoline. From about 2000 to 2010, gasoline demand growth more or less outpaced that of diesel. With barring 1 or 2 years, about 2004 and 2008, gasoline demand growth was actually higher than diesel. But in 2011, as the chart shows, diesel demand growth here in the red bars actually outpaced gasoline demand, as cheaper diesel was diverted to off-grid power generation as well as industry. Now let's look at LPG. LPG, or liquefied petroleum gas, as you know, is a fuel that's used for cooking and heating fuel and other heating fuel in Asia. This hydrocarbon mixture is basically produced both by refineries and is a byproduct of natural gas processing. LPG demand in India is also growing, but part of that growth in demand is because there are tiered prices for LPG. There's a lower LPG price for domestic use, while the industry and auto gas segment buys higher priced LPG. That induces LPG diversion from the domestic to the industrial sector. At the same time, LPG access to the poor actually remains very low. So our LPG demand too is growing at very rapid rates at an annual growth rate of almost 9% in the last decade, and this is one of the highest in Asia. Domestic LPG supplies, meanwhile, are not enough to meet demand growth, and we need to import about 30% of our demand. The LPG subsidy was about just under $1 billion last year, and I would think that there's an absolute imperative to target the way LPG is distributed within India. So if you look at if you kind of recap the demand side management issues that we need to take control in India, our priority areas are: first, we have to deregulate diesel prices, and secondly, we have to target the allocation of LPG. Now let's move on to the diversification of the energy mix and some strategic considerations in how we can enhance India's energy security. In the alternatives and renewables energy sector, I did an analysis in the field for biofuels, and as my analysis shows, well, we have enough mandates and policy goals. There's really very little success on the ground. Ethanol blending in our gasoline is still, in volumetric terms, still is very low. It's just under 17,000 barrels per day. Molasses-derived ethanol kind of faces the problem of pricing, while biodiesel production, for a variety of reasons, for pricing reasons, also remains very low. In other renewable energy, to my mind, it boils down to the cost per unit of generating electricity and the land requirements for each of those energies. So an evaluation of the best options available should be considered. Finally, as a strategic consideration for India's energy security, we should look at deepening relationships with resource holders. As the chart to the left shows, an overwhelming majority of our crude is sourced for the Middle East, and Samir's paper also kind of emphasized that. It is in our national interest to deepen ties with producers in the region. Now, in the longer term, when we look at where the highest volumes of incremental supplies will come to meet global oil demand, now this includes all sorts of supply and all sorts of demands. You can include conventionals, non-conventionals. Even when you look at this, we can see that the largest volumes of supplies will still come from the OPEC countries, with demand moderating in the Atlantic basin for a variety of reasons, from their own production as well as vehicle efficiency efforts. The Middle Eastern producers are looking at captive markets for their crude supplies. We should leverage this potential for mutually beneficial relationships in this region. I'd like to sum up by offering a few prescriptions on defining our role in the international oil market. Energy security, in my opinion, is guided by national interest. In order to enhance it in the Indian context, we have to allocate priorities, and those priorities are derived by an assessment of our objectives and resource capabilities. To that end, our immediate priority is fuel price reform, and a medium-term priority should be a diversification of the fuel mix, whilst deepening ties with resource holders. Thank you very much for your time.